The middle classes are getting squeezed particularly hard by the rising costs of education and housing, according to a recent study by the OECD. While these days the business press is focused on housing costs, with some justification, in this presentation I intend to focus on education costs and the price of entry into the professions. With the transition to the knowledge economy, the professions have become the last and best hope for the next generation of Canadians. But that dream, too, is beginning to sour. In this presentation, I will focus on the accounting profession.
In Canada, the accounting profession is highly regulated with 13 regulatory bodies across the country. And each CPA member is accountable to at least two, their provincial body and CPA Canada. A great deal of the regulations relate to auditing standards, which are largely irrelevant for more than 95% of member firms. Since 2010, when we began flirting with international financial reporting standards, we have seen changes to the audit handbook each year.
The 20th century saw a proliferation of professions from the original three: theology, medicine, and law. Each trade sought restrictions in order to protect the public interest and ensure ethical behavior. Or at least, that was the rationalization. More cynically, libertarian economists like Milton Friedman maintain that professionalization almost inevitably becomes a tool in the hands of a special producer group to obtain a monopoly position at the expense of the rest of the public. While many economists may often be at odds with Friedman, I think he might be right here. Particularly when it comes to the accounting profession.
Unlike medicine, the case for regulating accounting services is rather weak. In fact, accounting services themselves are not generally regulated. The restrictions in the accounting profession relate mostly to audit work. In Canada, only CPAs can express an audit opinion as to whether a set of financial statements follows an acceptable basis of accounting and appears accurate within an appropriate degree of materiality. So, CPAs themselves devise and regularly update rules for the presentation of financial information. While my profession safeguards the holy books of IFRS, ASPE, and United States GAAP, the Canadian Tax Department doesn't allow any of these standards for preparing corporate tax returns.
By our estimates, Canada's 13 regulatory bodies would represent one of the top 10 national firms, with combined revenue of about $778 million. More than 99% of CPA firms in 2020 were very small, averaging less than $300,000 in revenue. The remaining 100 or so billed over $14 billion. It's like they exist in a different universe. Understandably, the largest firms exert more influence. However, they serve different markets and have much different business models.
Most tax practitioners use simple cash basis accounting and adjust to accrual in accordance with Canada's Income Tax Act. For most public accountants in small firms, their value to clients is primarily their familiarity with income tax. While tax work is increasing in importance, audit and assurance work is declining steadily. Taxation is incredibly complex and requires a great deal of judgment. By itself, it requires considerable skills. Yet somehow our regulatory bodies and our universities focus a great deal more on assurance standards and management. Our largest firms offer services in audit, taxation, and management consulting. There is a fiction put forward by our largest firms, and enforced by our regulatory bodies, that new practitioners require expertise in all three areas. However, practitioners in large firms invariably work in only one area. So, this notion of broad competencies across the full range of specializations mainly serves to exclude small firms from qualifying to train new CPAs. In our view, the regulation of the trade is primarily meant to increase the dominance of the profession by the largest firms.